This gives you an incredible ability to compound your money. And I've seen this firsthand. I've seen accredited investors turn into hedge funds, turn into hedge fund managers. I've seen individuals go from less than $1 million in net worth. One particular person I can think of started out with about $500,000 in net worth that he actually, I take that back, it was $500,000 that he borrowed, okay? So he borrows $500,000. The guy's worth $100 million today. Yeah, from doing stuff like what I'm talking about here. As time went on and we kind of put the word out as to what we were doing, we realized that there was a huge untapped market with respect to the more general population and especially younger millennial investors who want to participate in deals like this and may not yet be accredited. What we're doing on the platform is we're giving companies a way to raise a critical mass of capital quickly to achieve these milestones, and we're giving investors access to a very unique structure where they can mitigate their risk in a time of great uncertainty and a time where, frankly, traditional methods of investing in the market are going to make it very hard to build a nest egg.
Steve, I know you speak to a lot of sophisticated, successful investors on the Glassbox platform. Is there any sort of insight that you can share on how they approach the current market?
We do have a lot of high net worth individuals on the Glassbox platform. You know, they're investors that want to participate in our offerings. And, you know, not just individuals, actually, hedge fund managers, investment advisors. And it's really interesting being in my position, being able to talk to all these people and kind of get a read on how they're reacting to the current market and what they're forecasting. And, you know, everybody's concerned about the same things: inflation, interest rates, the market volatility in general. You know, a lot of these guys have seen all the gains they had during the pandemic stripped away in like the last, you know, few months. So, you know, and we've got guys applying all different types of strategies, you know, whether it's, you know, direct investment in biotech, early stage biotech, to the guy who's just selling covered calls on Apple. So I'm getting feedback from sort of this, this hedge fund manager level investor that, you know, is involved in all these different areas. And the one thing that I can take away from this group, this very diverse group but very successful group, is that they have all developed an incredible ability to mitigate uncertainty. And I know that sounds like sort of an amorphous skill or a sort of abstract skill, but it really is something that's critical to the success for these fund managers. And what I mean by that is that they've been able to find ways to either manipulate data, analyze data, access data in a different way than the common investor. That's, you know, that's sort of level one of mitigating uncertainty. Mm-hmm. And then level two has been the way they structure their deals. So, you know, obviously the guy who's selling covered calls, you know, he's got a you know, very conventional strategy, and that's, you know, it is what it is. But there are a lot of guys on the platform that are making direct investments in public companies. And, you know, the way they structure their deals is really, really extraordinarily creative. And a lot of times it's done in such a way where they're able to take a huge amount of the risk off the table when it comes to their exposure to macroeconomic events. So, yeah, I don't know if I'm directly answering your question, but you know, what I've learned from this group is that, you know, you have to learn to be successful. You have to find a way to mitigate uncertainty.
I want to talk a little bit more about Glassbox, because That's something that you've been working on for a few years, and that's in relation to all the advice and strategy you learn from investors. So can you tell me why you created Glassbox and more about the company?
Yeah, so Glassbox, as you know, Glassbox is a platform that enables sort of the common investor to participate in the same type of opportunities that were typically only available to hedge funds, and I would say the investment elite, people who were well connected on Wall Street, or basically had a lot of money with an investment advisor, and that investment advisor would introduce them to deals like this. Now you've got direct access as an investor through Glassbox. And, I created this because I felt like, there was a huge untapped market for these companies looking to raise capital. And I felt like the changes in securities laws were, not really being taken advantage of by issuers in the market. I mean, you can now generally solicit an offering to accredited investors if you do it under Reg B, and through Reg A to the more general population. So we do both of those things on Glassbox.
So beforehand, if I recall, it's one of them you can solicitate, which pretty much means advertise to the general public or just investors. So general solicitation is a legal term that gets used in the Jobs Act and securities laws in general, and basically it relates to advertising your offering to the general public. And if you go back in time, pre-2015, if you were a private company, you could not advertise your offering to the general public. You had to go through your own personal network to raise capital. So now, because of these changes, we got a platform, we're able to put companies on it, we can advertise, and not depending on the what's called the legal exemption from registration that we use, and I know that's a mouthful for most people, but depending on the legal exemption we use, we can either advertise to the general public or we can just advertise to accredited investors. Okay, so how's this platform different from all the other ones like Kickstarter? I imagine it's not a crowdfunding site?
It's not.
Okay.
It's not. So Kickstarter's quite a bit different because you're funding people's projects early on, and if they're successful with it, you might get the first version, or there's ways you get compensated outside of a straight financial return. With Glassbox, it's really unique because we're not a broker dealer, we're not an investment advisor, we're just a technology platform that happens to be licensed as a law firm. So what we do is we help both private and public companies put together offerings. So we do all their legal documents, host that offering on our platform, and then we enable the company to advertise it. So we're just sort of the technology piece for that company to get the word out on their offering. And we don't charge commissions on it. There's no fees involved other than the initial portal fee, which entails or compensates us for all the legal work that we do. So really unique because I feel like it's to the benefit of both the investor and the company the way it's set up.
Then who can invest though? Would it be just accredited investors or non-accredited investors, or both? How's that work?
Both. So initially we put it together with the idea that we were going to get the individual accredited investor directly involved in these offerings without, and investment bankers will not like to hear this, but without having to go through an investment banker. So, all of the diligence material that an investment banker would normally require would be on the platform, in a data room, in the offering, just through our system. And the investor would have direct access to that, and we would give companies, we thought, a higher value proposition than going to an investment banker that might have a limited network of individuals and be charging a high fee. You come here, fee's much lower because it's really just a transaction fee based on the legal services we're providing, and the pool of prospects is much greater. So we initially thought we were just going to go after accredited investors in that way. But as time went on and we kind of put the word out as to what we were doing, we realized that there was a huge untapped market with respect to the more general population, and especially younger millennial investors who want to participate in deals like this and may not yet be accredited. So
So you just brought up millennial investors. So right away, I'm
Yeah.
a millennial. I
Sure.
don't consider myself an investor because I imagine. Well, am I though? Because let's say I bought a couple shares of Tesla. I invest in Tesla.
Yes.
But am I an accredited investor? Am I not? Like, what's the definition?
Well, I'm a big believer that you manifest things in your life. So, if you want to be, I think everybody out there, no matter what your life goals are, everybody wants to have financial freedom at some point, and to have the kind of financial freedom we all want, I think you need to hone your investment skills, and, whether you're young or whether you're a little bit older, I'm a Gen Xer, or even older than that, I think that we all need to think of ourselves as investors, no matter what our nest egg is, because that's a necessary skill to have. So we need to think we're an investor and, basically force ourselves to develop that skill to become who we, are kind of expecting ourselves to become.
Okay, so I'm gonna be honest.
Yeah.
I think I'm an investor.
Yeah.
I made a mistake. I think a couple months ago, I spent a lot of money on Dogecoin, and as you can see, as the market's gone by, I don't consider myself a successful investor.
Regarding but that's what it takes. You got to make mistakes to become a successful investor. You don't learn unless I've made plenty of mistakes myself.
But where can I go to learn? I mean, that's my biggest thing. I don't want to keep making mistakes and then end up super broke. I mean, I imagine just like these successful investors, they have a network, they have resources, they have a strategy. Like look at Ray Dalio and Warren Buffett, like they're doing something right.
Of course.
How can I learn from them? Like
No, I all great points. Well, first off, I would commend you on taking the risk on something like Dogecoin. Not that I would invest in Dogecoin or I'm suggesting anybody else do that, but at some point we have to take a leap of faith and we have to, get into these deals like that and learn from our experiences. And, you're not going to make, it hasn't been my experience that, you make, millions of dollars as an investor on day one. You've got to make these little trial runs in the beginning, and you learn. Sometimes they work, sometimes they don't. But to answer your question, there's so many great investors out there with all this content on YouTube telling you, you should do this, you should do that. If you could actually go out today and you could listen to one set of investors, very successful, that are going to tell you inflation is going to end in 2022. You need to be in treasury bonds, and that's the best thing that they're going to tell you. They said move all your money to bonds, whether it's treasuries, whether it's corporate bonds, move all your money to bonds because inflation's going to melt down and you're going to see a huge increase in the value of those bonds. Then you're going to see other investors that are going to say, I would never touch bonds again. I think inflation's going to run rampant. And you look at both of these, the leaders of both of these camps, and they're incredibly successful people. So, it's hard to say, who you should be following. So, in my opinion, what you really have to do, you have to be a student of the market, a student of all these different strategies, and figure out what resonates with you, and apply and develop your own strategy and apply it and stick to it. Because once you start sort of deviating with the wind, you watch one video one day, you read a book the next day, you see a news article the next day, and everything is causing you to constantly change your mind. As an investor, that's not going to work. You've got to pick a strategy and you've got to stick with it. Now you've got to constantly be taking in new information and evolving, but you can't just say one day, okay, this guy's successful, so I'm going to watch what he does and follow that, and then the next day, jump onto a totally different strategy. I think you got to be consistent.
Okay, so as a millennial investor, that's what I'm going to call myself now.
Yeah.
How can I use Glassbox, and how can private companies use Glassbox? Because I imagine I can start seeing new offerings on the portal that I might not see elsewhere, right? Like, how can I get the upper hand? How can they benefit from using the platform?
What's really cool about Glassbox for somebody like you is that it's going to give you access to opportunities you're really not going to see anywhere else. I mean, these are opportunities where you can invest directly in, I'm going to give you an example. You can invest directly in a public company. You could put up, let's say, $5,000 as an investment into this public company. And instead of buying stock in that public company, you're going to buy something called units, okay? It could be one unit, it could be multiple units, but the unit is going to be comprised of common stock and a warrant. And I'll explain what a warrant is in a second. But you're getting these two things when you invest, as opposed to investing directly in the public market and you just get the stock. So let's say in this hypothetical example that I'm giving you right now, that the company you're interested in has a stock that's trading at $1, okay? Now, there's a lot of sophisticated hedge fund investors out there that say, well, if it's trading at $1 on the public market, I need to be able to buy it at a discount, because I need to insulate myself from all this volatility and whatever. For it to be worth my while, if they want $5 million from me, I need to be able to buy it at a discount. Well, that may not happen on our platform. What you're going to end up buying is probably the same. You're going to buy a unit that's going to have common stock priced at the same price as what you're going to get it for in the market. So let's say the stock's trading at $1 in the market. Your unit might cost $1. So you're getting that one share of stock for $1 within that unit. But you're also getting the warrant. Okay, that's the big difference between what you're getting in the public market and what you're getting with us.
So you keep saying warrant.
Yeah.
What's a warrant?
So the warrant is basically like an option to buy shares in the future. Okay. So options are the term option is typically used, on the second market. Like, if I'm buying options in Apple, like I'm gonna buy that through my broker. But if you're buying a right to buy more shares in the future directly from the company, that's more frequently called a warrant, okay? Especially if you're not an employee, you're just an investor. So a warrant in this case may be, in my example, the right to buy one more share of common stock at $1 for the next 2 or 3 years. So let's say the stock goes up to $4 or $5 in 2 years, and you still have that right available to you to buy at $1. Okay, let's say it went up to $4, okay? You have the right to buy at $1. Well, now you just made $3 by exercising your warrant, and you could receive those shares for $4 and immediately turn around and sell those shares you just received back into the market and realize that $3 gain. So what's amazing about this for really any investor, but especially a young investor, is that you can now protect yourself from the same kind of market uncertainty that all the big successful accredited investors and fund managers are protecting themselves from as well. So what I mean by that is that you can put your initial capital up for the units, right? Let's say you invest in one unit, $1. Within 3 months, 6 months, 9 months, you could sell the common share you received in that unit back into the market. And let's say, it doesn't work out that well for you. Let's say that you had to sell that share for half of what you paid for the unit, okay? So let's say that now the stock's trading at 50 cents, okay? God forbid that happens, but it could, right? So now you've lost 50 cents, but you still have the warrant. And let's say that 2 years goes by and now that stock's worth $4, okay? So you go exercise the warrant at that point and you put up an additional $1 to exercise it, but immediately when you get the stock back upon exercise, you sell it into the market, you realize that $4 sales price, and you just netted $3 off of that. So you put that together with your 50 cents that you made in the beginning, and now that $1 investment has yielded $3.50 in return, Now you still got, it's really a $2.50 profit because, you have your basis that you had in there, but but you've you've done very well for yourself in a short period of time. And the beauty of this is that if there's two more things I want to touch on with regard to this concept. One is that this gives you an incredible ability to compound your money, and I've seen this firsthand. I've seen accredited investors turn into hedge funds, turn into hedge fund managers. I've seen individuals go from, now these guys started out pretty well off, and they didn't have access to the same kind of, tool that we now have with Glassbox. They were like Wall Street guys, but they started out with less than $1 million in net worth. One particular person I can think of started out with about $500,000 in net worth that he actually, I take that back, it was $500,000 that he borrowed, okay? So he borrows $500,000. The guy's worth $100 million today.
Wow.
Yeah, from doing stuff like what I'm talking about here. He's compounding his money by basically investing, getting his capital back quickly, but still maintaining upside in the market because of the opportunities he's creating through the warrants. And in his particular case, he used a variety of structures, but they all kind of come back to this same concept, which is you get your capital back, but you still retain upside down the road. And what that does for you is obviously it gives you the ability to take that initial capital, reinvest it, do the same thing, reinvest it, do the same thing, reinvest it, do the same thing. And then in a short period of time, you've got this huge portfolio of warrants out that are sitting out there. Some may not do very well, but it's not going to take, you don't have to hit on all of them. If you hit on, 20% and you've got the deal structured the right way, you're going to do very well. So that was the first point I wanted to make. The second point I want to make is that the type of opportunities that we're putting on this platform are designed to basically help companies achieve a specific milestone. So you have companies that need to raise, say, $3 million. It's not just for working capital, and we don't know what's going to happen with that $3 million. It's $3 million to take a product to market. Maybe they need to do an infomercial. Maybe they need to, that's kind of a random example, but like a more specific example would be, a med tech company that needs to complete a clinical trial. And once they're able to complete this clinical trial, their valuation is likely to go up, and they're also going to be able to commercialize their product. So, I just came from a conference where I met with several of these types of companies interested in the platform in this, exact mold that I'm talking about, where, they're looking for an amount in the low millions of dollars. If we can inject that through the platform, think about this from the investor's perspective. If we can inject $3 million into that type of company, they're able to achieve their milestone within 6 months. Valuation is going to increase at that point. If all you want to do is ride the wave for that milestone, and you're like, I don't know what's going to happen when they commercialize the product. I don't know if there's too much competition out there. I don't know what's going to happen in the economy. I don't know if, healthcare is going to change, or health insurance is going to change, and nobody's going to be able to pay for this device that they're developing. You could throw all that aside and say, I'm just going to get my capital back when they achieve this milestone. I'm going to take my shares out, and then I'm going to leave my warrants, open, obviously, and leave them, on the table to be exercised if the stock does continue to run. You might even, depending on how your warrants are structured, you might even be able to exercise your warrants right after that milestone is achieved. So what we're doing on the platform is we're giving companies a way to raise a critical mass of capital quickly to achieve these milestones, and we're giving investors access to a very unique structure where they can mitigate their risk in a time of great uncertainty, and a time where, frankly, traditional methods of investing in the market are going to make it very hard to build a nest egg, in my opinion.
So that seems great for people like me, as trying to be an investor and put in some of my money to, help fund these companies. I have a couple friends. So one of them did a Kickstarter, and I just bring up Kickstarter because I'm going to bring up the platform. One had a Kickstarter, raised maybe $500, which is nothing. had another one who raised over $110,000. The one who raised over $110,000 said he did a lot of work marketing, trying to get exposure, because nobody's just going to see you on the platform. On Glassbox, if I'm a private company or a public company on your platform, do you help with try to get exposure, or what do you do?
Yeah, I mean, that's really the primary reason I would say that companies come to work with us, is because we're not only putting together the legal documents in an offering portal format, but we're helping to market that portal. And depending on the legal exemption that they're using, and I know that's a term I used earlier and it's going to sound like mumbo jumbo to a lot of people, but if you're trying to administer a private offering directly to investors and you're not selling what are called registered shares, which are shares that have gone through a registration statement approved by the SEC, you have to sell under an exemption from registration. So we sell under Reg A or Reg D, and depending on what exemption we're selling under, that will define how we help to market the offering. So what we'll do is we'll go in and we'll actually run we'll work with the company to figure out, okay, who is it that you want to target? Because they don't want to target, we don't want companies to target people who don't believe in their mission, and everything that I just said earlier about kind of limiting your exposure to market conditions, that's sort of one side of the coin. We want to find investors who believe in what these companies are doing and want to stick with them for the long term, but have that out if they need it, or have that sort of way to take some of their chips off the table if they need it. Because let's say, nobody's buying one share in these companies. You're going to buy, depending on how the stock's priced, you might buy 10,000 shares, you might buy 100,000 shares, who knows. But you might say, I'm going to take half my risk off the table in 3 months, 6 months, whatever it is, and I'm going to let the rest of it ride. And those types of investors that have a belief in the long-term visions of these companies, that's who we're really going after. But we want to give the investors, some risk mitigation tools as well.
For somebody like me who wants to invest, what do I need to do? What are the next steps?
Well, I would say there's two things. One is watch as much content as you can on this Glassbox channel, because we're going to be bringing on, experts regarding the Jobs Act. We're going to be bringing on people who can talk about in more depth than we did in this video, the definition of accredited investor, all these different legal exemptions, Reg A, Reg D, what all that stuff really means. So, as an investor, step number one, understand what you're getting into. Do the real work. Educate yourself. And we're going to try to provide a lot of content on this channel to do that. Number two, and you can do these things in parallel. You could do number two right now as well. Sign up with us. Just go ahead and register, and that's going to give you access to all kinds of new opportunities that come through our platform. And it doesn't mean you have to invest. There's no cost to sign up. There's no obligations of any sort. You're just asking to receive notifications when new people join the platform, or new companies, I should say, join the platform. So, if you list yourself as accredited, you're going to see all the Reg D offerings that come through. If you list yourself as unaccredited, you'll see all the Reg A offerings that come through. And if you're a company or you're a founder out there looking to raise capital, you can also check out our website and see what we have to offer as far as all of our portal services. But I would really highly encourage people to take that first step I mentioned and just try to educate themselves as best they can and see if this is right for them. I think in the current market climate, this is a tremendous opportunity for younger investors, because I think it's going to be super challenging to get the same kind of returns people saw through the pandemic for the next several years going forward. Whether it be equities, crypto, bonds, whatever. I feel like if you just want to place bets in the general market and let it ride, you're not going to see these crazy outsized gains we saw because the stimulus dollars aren't going to be there. But with what I'm talking about, you're going to have the opportunity to participate like a sophisticated investor and structure deals or participate in deals that are structured to your favor that will enable you to more rapidly compound your money. So love to have all of the viewers check it out, and for anyone who's interested, love to have them sign up.
Yeah, well, no, this is very exciting. I mean, you mentioned sophisticated investor. I want to be a sophisticated investor. I just don't want to keep throwing things out like that Dogecoin. I think this is going to do well. Maybe it will, maybe it won't, but at least this gives me a chance to really learn from people like yourself, learn from other people that you're going to bring in, and that's just exciting because I've never really seen that before. From my experience, just the way I kind of grew up, it's more like you have the very successful people and hedge fund managers, and they have the little group, and then you have, you know, the 1%, non-1%. But just giving that chance, opportunity for everyone, and people like myself, is where I'm excited for.
Well, that's the great thing about the era we're living in, is technology can deconstruct all of that, and I think Glassbox is, I like to think, participating in that revolution, so to speak, you know, where information and access to opportunity is now going broader. And yeah, definitely it's an exciting time. I mean, not just because of what we're doing, but a whole bunch of other people in the space too, that are helping companies raise capital and sharing, you know, access to these opportunities with a broader group. So look for I look forward to participating in more discussions like this, and hopefully you know, we can have some experts on in the future to talk about, you know, all the things I mentioned. So
that's exciting. Well, thanks for being here, Steve.
All right, thanks, Brody.